Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to Motor Trade Radio. We're joined today by Derren Martin, CAP HPI's Director of Valuations, for our regular end of the month review of trade values. So welcome back to the pod on what must have been a busy week for you. It's end of Q3, if you can believe that. And also you made an announcement on LinkedIn about some of your future plans, which some listeners would have read about, but for those who didn't see it, can you share anything on that?
Hi Curtis. Yeah, thanks. It has been busy. With regards to me, a bit of, I guess, personal news. Yeah, I've decided to leave CAP HPI and to go out on my own as an independent consultant. So had a bit of trauma in life this year, which I won't go into too much detail on, but it's just made me reassess things and go off on my own. But I'm around for a little while yet. I'm on my notice period. If anyone wants to know more, it is on LinkedIn. But that's from me. I've been at CAP for 12 years, and time to go and do something a little bit different and get involved in a few different projects, hopefully. So yeah.
And as you say, we don't have to dwell on it and go in detail. I think, the post, your LinkedIn post kind of says it all. So, for anybody that hasn't seen it, then do head over to the LinkedIn and check Derren's post out. A lot of support on that. And I think, generally, whatever happens, you're not going to be a stranger to the podcast, hopefully. I'm sure there's plenty of time yet, and we'll keep you updated as things transpire. But I think, from Curtis and I, obviously, we wish you all the luck. I know you've got a lot of support so far and some good opportunities, I think. I support you in what you're doing. So, well done with that one, Derren.
Yeah, I've been blown away by the support, actually. So it's really nice. I mean, it's a very personal thing that's happened, and everyone has their own grief to deal with, but it has been really nice. So yeah, I really appreciate the support that I've had and from you guys as well.
So, I mean, we'll get on to our regular sort of what's been happening in the sector, and interesting time, as Curtis said there. Now at the end of the third quarter, heading towards that sort of autumnal period of the year, the fourth quarter, at the end of one of the second biggest plate months of the year with September. But let's start as usual, taking us through the headline trade figures at that 3-year 60 mile point, which has been up 0.2%. And how does this fit with on the year to date and compared to previous movements for that same period?
Yeah, so it's a positive of 0.2, which is, it's relatively unusual, isn't it, through the course of a year to get an upward movement, but it's not actually that unusual for September for movements to go, for values to go up. So if you look at sort of averages over the last sort of 10, 12 years since we introduced CAP Live, it's generally, if you look at the overall average, it's flat actually this time of year, but that does include a sort of a drop of last year when it was quite a hefty drop. It's generally a fairly a level month. You can have a sort of a 0.2 up or a 0.2 down or level over the last sort of 10 or 12 years. So it's been good. I think the difference this year is that we've had a really strong build up to this as well. We've had what we've sort of been calling the summer of strength, summer of stability, however what you want to call it. In previous years, you don't necessarily have that. You have sort of small drops, but every month this year has been a more positive movement each month than the seasonal average. So there's a shortage of vehicles in the market because of the COVID year of 2020, then dragging into 2021 with semiconductor crisis, low new car registrations. So 3.1 million less over a 4-year period than over the previous 4-year period has meant that 3 and 4 year old car has been low in numbers, which has kept values strong. And along with strongish demand from retailers who are all doing pretty well. That's what's keeping the market buoyant, and hopefully it will carry on. So yeah, it's been an interesting time, and I think when Dylan and I did the podcast last month, he did predict a small movement up, and I predicted a small movement down. So all credit to our forecaster there.
I think it's a very marginal movement. We'll call it level, shall we? I think it's very small, but I think in terms of we talked last month around that sort of the holiday period and that sort of time of the year, and how did September pan out in terms of throughout the course of the month within your live data? Because obviously we always talk about the snapshot of a time of the month, but actually that period throughout September, as the market kind of started to recover or return to the sector.
Yeah, I think we saw a small movement down last month, and that carried into the first days of this month. So I think it went to sort of 0.2% down after the first week or so, and then it slowly started to recover, but very slowly. So it's been very stable, I would say. Obviously, there's lots of moving parts within there, as we always say, but overall, it's been strong throughout the month. We've seen really strong conversion rates at auction, sort of 80% plus. We've seen the fleet cars are the ones that are selling the best. Some of those that sort of the retailers sort of unwanted cars that they put through the block have been less desirable, but even those have been selling as well. And that's the sort of a theme that we're seeing. Those grade 3s and 4s and 5s at auction, they're selling. Vendors sort of coming to the party on those and realizing they need to sell them. So it has been kind of strong across the board, but it has gradually improved as the month has gone on, but only very slightly. I mean, in 2021, living through that, the values were going up every single time we looked. It's been a lot more stable for a month, and as I say, it isn't unusual for September to do that. The volumes from the new plate that get generated, so part exchanges and fleet returns, they tend not to hit until later in September and into October. So there's not a lot of volume around, and demand has been strong, and dealers they're not overstocking. So when they sell a car, they need to go back in and replenish it. So that just keeps the market ticking over nicely.
And as you say, Derren, it's a small overall movement for the month, but were there any notable trends across the different age bands?
The weakest age band was actually at 10 years old, but even that was a very negligible movement down, and that has been sort of the weakest age band throughout the year, but it only dropped by 0.4%. So that's really strong, especially when you look at those cars being lower value. Apart from that, we had a 0.1% increase at 1 year, and 0.2% at 5 years. So it's been fairly similar there, really. So it's been strongish across the board, I would say. Well, we'll talk about electric vehicles, I'm sure. Slightly more pressure on the newer electric vehicles, because they compete with those new car offers which are being pushed by manufacturers with the ZEV mandate target in mind.
Yeah, and looking specifically at some of the vehicle sectors, any trends there? I mean, I did notice there were some seasonal corrections around sports cars.
Yeah, but even that is fairly negligible movement down for sports cars, 0.5% down. So yeah, they're not seeing the positive that the mainstream cars are, but that is fairly normal seasonality. Convertibles and coupe cabriolets, they're coming down about 1.5% as well. So yeah, those seasonal cars coming down. Apart from that, we've seen strength for the most. Well, a lot of the data is now SUVs. Obviously, a lot of cars out there are SUVs. So we've seen they went up by 0.6% overall, and small and medium SUVs, where a lot of the volume is actually, they seem to be the strongest of those. Large SUVs have fared okay. At 3 years, they have also gone up as well. So those mainstream sectors, I mean, super minis went up, lower medium went up. These are all averages, obviously, that we're talking about, and includes all fuel types. Even upper medium, which is a sort of a less desirable sector now, I would say, with the growth of SUV, they've gone up by around 0.5% as well. So gentle strength, I would say, in the market for all of those sectors.
And I noticed in the editorial, it was a particularly strong month for Land Rover. What was behind that? What do you think drove that?
Yeah, Land Rover's been an interesting one because they have felt some pain this year. They've had values of their vehicles have dropped considerably over the sort of the last 12 months, but they now look really good value. And we've seen, across the board really. I think the Evoque went up by sort of 3%. The Evoque Hybrid went up by 4%. Discovery Sport by 4%. So there's definitely been a recovery there. And it's kind of what happens is if something comes down fairly sharply, it tends to then look good value and then make the dealers sort of think, well, I can buy those, I can stock them, I can sell them quite quickly at those sort of prices with a reasonable margin. And that's what we've seen, and that's good to see that sort of recovery because I guess what people do seem to think that when values start to drop, that's always going to be the case. When's this ever going to end? But it does. They bottom out, and then you get to see a recovery and an uptick. So and it's kind of similar to what we've seen on electric vehicles as well. With that, it's a similar sort of picture.
And you mentioned EV there and touched on it previously, but what trends did you see in that fuel type? After we saw 24 months of downward movements. It was a strong month for BEVs, wasn't it? I think, they, as you said, they cited there a little bit of a recovery.
Yeah, the amount of time we spend talking about BEVs when there's such a small part of the used market is incredible, really. But it's what everybody wants to talk about. There's still only around 4 or 5% of the sold data received electric vehicles, but they're definitely gaining traction. As you said, they've dropped by they dropped by just about 60% in 2 years. There's been a real realignment there, which is obviously really well documented and has put off dealers from sort of dipping their toe in and stocking them, as we've seen from our retail figures. But this month, electric vehicles are the strongest fuel type. They've gone up by 1% at 3 years. They've gone up by 0.4 at 1 year. So that's nearly £200 at 3 years. So we're seeing a recovery there. As I said, they've kind of bottomed out and starting to improve. But the important point to make on electric vehicles is that their values can be all over the place. If you compare them to sort of ICE vehicles, you've got some like I guess like an I-Pace versus an F-Pace, where the I-Pace is worth £14,000 less than the equivalent petrol vehicle, whereas you've got others like the BMW iX where it's worth more than. So when you look at where these values are going to go in the future, you have to consider where they are versus their peer vehicles, where they are versus the petrol and diesel equivalents, because there has to be a reasonable difference between them. You could argue that the I-Pace is going to continue to grow in strength because of that gap being huge. But time will tell on that one. But yeah, some of that Land Rover product, Jaguar product, has performed very well. So it's interesting to see how JLR sort of develops and sort of recovers from some of those drops that they've had.
And you mentioned I-Pace there and mentioned the BMW. Was there any sort of notable movements, increases, particularly around what retailers and listeners should be thinking and considering for both BEVs and obviously for other fuel types that you
Yeah. Well, certainly on the EV side, e-tron has gone up 3%. i4 has gone up by 1%. The i3, which is an older vehicle, has gone up 5%. The C4 electric, which has had some real difficult times with values, that's gone up by 1%. So yeah, we've seen a lot of those vehicles improving, and yeah, it's been a sort of a fascinating month without values moving that much, really, because they have it's been going in the opposite direction. If this was a sort of a small movement down, we probably wouldn't be talking about it as much, but because there has been a little bit of an increase, it's been good to see. And some of the SUVs that we've seen, Renault Captur petrol has gone up, Seat Arona has gone up, the Mini Countryman has gone up by a couple of percent, and Mazda CX-5 increasing as well. So yeah, we've got that sort of trend of across the board, but EVs stand out and Land Rover stands out as being probably the two sort of joint strongest areas of the market.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
And Derren, every month you poll the views of the auction houses. What were they telling you about some of the month-on-month trends in terms of stock levels and demand? Because you did mention that certainly among dealers, they were only stocking when they sold vehicles. But what were the auction houses telling you?
Yeah, it's probably been one of the most interesting surveys that we've done this month, because stock levels for over 80% have actually either stayed level or gone down. So we're not seeing that abundance of stock um, come through just yet. Whereas demand for similar number, so over 80% have seen demand go up. So supply steady or dropping, and demand going up. And obviously that supply demand dynamics are what drives values in the used vehicle market. So we are seeing an interesting times there really with that. And I would expect next month that we'll start to see more volume coming into the market from that plate change, as I said earlier. But yeah, we've seen some strong conversion rates, with a third of the auctions responding that their conversion rates had gone up during the month, and almost 60% saying they were level. So conversion rates pretty good. Supply, obviously that is the supply demand dynamics that drive the conversion rates as well. And as I said earlier, a little bit of those more heavily damaged vehicles being moved on as well and finding homes. So overall positive from the auction side.
And we touched on it right at the start there. We're approaching the end of Q3 now, and we always sort of try and think about what to expect going into this fourth quarter. And we don't want Dylan here, so it is just down to you this one, Derren.
No pressure.
No pressure. Yeah. So
I've spoken to him.
You've spoken to him before we got it right. So, yeah.
Yeah.
And were you in agreement, or have you just taken what you said?
Yeah.
No,
Yeah.
So, I mean, obviously, crystal ball, we're heading now into this fourth quarter. A lot of sort of speculation around what's happening with the OEMs as we move into this fourth quarter, and the pressures you've mentioned on the Z mandate. But at the same time, we've seen this strength start to recover to the market. I mean, what's your views and expectations now in sort of the coming weeks and, heading into this fourth quarter of the year?
Yeah, last year we were just about to head into the really difficult period where values dropped by 10.5% over a 3-month period. So that final quarter was very tricky, but values had the signs were already there last year, with values coming down over the sort of the August, September time as well, quite considerably. So we did have that realignment then. And what's kind of happened, I think I might have said this last month, is that it feels that what that got to was that realignment meant that cars now looked reasonable value for the dealers and for the consumers. And that's why we've had that really steady year this time around, because values needed a little bit of the heat taken out of them. And that's kind of happened. So now you get to the stage where we are short of vehicles in the market. There will be some coming back, but the underlying theme is still a lot fewer cars at that 3 or 4 year old point than there were previously, over previous years. And as we head into the final quarter, we are expecting values to come down to a small degree, but nowhere near what happened last year. So I would say it'll be less than a quarter of that. Maybe, less than 1% over the next month. Maybe just over 1% in November. And December is always a short month. And you can also see that dealers, I think this year, will be looking to buy more than they have done, more than they did last year. It's kind of they do always look to purchase for January in the hope that January will be buoyant, and we think it probably will be. You've obviously got cost of stocking involved in that, so they might not be buying in considerable bulk. But I think where they see some value, they will be buying at this around this final quarter, and that should keep values quite strong. So you've got the dynamics of not an oversupply of cars, and demand being relatively strong, which we think will lead to quite a strong last quarter. But even if values drop, that's not an unusual occurrence for this time of year. We should expect to see that, but again, we're expecting it to be stronger than the seasonal average of those drops.
Yeah, like you say, it's it looks like it will be a fairly healthy, strongish year by the time it's washed through. But as you say, not to surprise when you do get a bit of a drop, because they do drop, don't they?
Yeah.
So yeah, it's
Even with that drop, sorry to interrupt, even with that drop, you will get values at the end of this year being worth more, cars worth more than they were at the start of the year at the same age and mileage point. If the final quarter plays out as we expect it to be, then there will be cars will be worth around 0.5% more than the equivalent cars were at the start of the year on average, which is a really strong year. You don't normally expect that. You would normally expect, as cars age in their life cycle, with supply and demand dynamics playing out, you would normally expect maybe a 3 to 5% drop, and we're looking at a small increase if the final quarter plays out how we expect it to. So, and then you go into January and expect it to be relatively buoyant there as well. So we're in a good place at the moment, and as I said earlier, long may that continue.
Yeah, very, very optimistic outlook for those listening to the podcast. So, I mean, I say, we can't go through everything on this podcast, but say, always appreciate you coming on and talking through some of the context behind those headline figures. But if anybody hasn't had sight of the this month's editorial from Derren and the team at Cap HPI, you can get the full editorial that you can head over to cap-hpi.com. Or you just check out Derren's LinkedIn feed or any of his editorial team, and it'll be shared through their channels to get the full editorial there. So, I mean, as always, it'll be great. Can't wait till we start to catch up next month, Derren, because we'll be in that middle of the fourth quarter. We'll have the September results for the new car registrations, and we might have a bit of view of what's been happening in the used car activity by that point as well. So it'll be
and new car as well. New car activity is obviously what everyone's looking at.
That's the one, isn't it?
Is there going to be heavy discounting on EVs? As they're going to be holding back on ICEs? All of these kind of dynamics, and then obviously the caveat on what I've said with strength as well, is if our remarketer is going to be responsible as they've got more cars to sell in this quarter, we reflect what we see with the sold data. So there are obvious caveats. We're not setting the values. We're reflecting what cars sell for. So lots can change.
We won't go into politics of a budget on the 30th of October at this stage either, and what that could mean to the sector. But we'll let others worry about that one on these catch-ups.
But that's all for this special weekday Motor Trade Radio podcast. Many thanks to Derren for joining us. I mean, fascinating insight into both September and the final quarter. So many thanks for that, Derren. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.